Nuclear energy is having a moment, and BWX Technologies has been building the reactors for U.S. Navy submarines for 70 years. Now the commercial nuclear build-out is adding an entirely new demand driver on top of that base.
Revenue up 26.1% year over year, 12.4% operating margin, and a business that sits at the intersection of defense and clean energy. That is an unusual combination in this market.
Revenue came in at $860,200,000, up 26.1% year over year. EPS was 99 cents GAAP. Operating margin was 12.4%. These are numbers that reflect a business growing with discipline.
I want to push back on framing BWXT as simply a defense company. The government segment provides stable, multi-year contracted revenue from the U.S. Navy Nuclear Propulsion Program. But the commercial nuclear segment is what is accelerating the top line. The two are running in parallel, and the combination is what is driving the growth rate above what either would achieve alone.
So this is a defense foundation with a commercial nuclear kicker, and both are growing. Lana, break down where the revenue is coming from.
The government operations segment is the core. It supplies reactor components for the U.S. Navy's nuclear-powered submarine and aircraft carrier fleet. This is a sole-source contractor relationship with stable, long-duration contract revenue. That segment has grown steadily as the Navy has accelerated submarine production under the Columbia-class and Virginia-class programs.
And the commercial nuclear piece, what is that business?
Commercial operations serves the operating nuclear power plant fleet for fuel, components, and services. It also has exposure to the small modular reactor build-out through BWXT Advanced Technologies. Utilities and governments globally are re-evaluating nuclear as a baseload clean power source, and BWXT is positioned to supply the components and fuels those plants require.
Margins, how are they holding at scale?
Operating margin was 12.4% on $860 million in revenue. For a defense contractor that is not bleeding-edge aerospace, 12% is a reasonable and consistent return. The business does not swing dramatically. It generates predictable cash from government contracts with incremental commercial upside.
EPS 99 cents, is that clean?
GAAP EPS of 99 cents reflects operating earnings without significant distortions. There is some stock-based compensation and depreciation, but the underlying cash conversion is solid. This is not a GAAP-adjusted to look better story. The reported number reflects the actual profitability of the business.
We opened with the nuclear renaissance. The picks and shovels framing is the right one here.
The structural insight for BWXT is that they are not a bet on whether any specific nuclear technology wins. They supply components, fuel, and services to whatever nuclear infrastructure gets built, whether it is large-scale gigawatt reactors or small modular reactors. That agnosticism is valuable when the technology stack is still uncertain.
And they have been doing this for 7 decades. The institutional knowledge and regulatory relationships are not something a new entrant replicates quickly.
The surprise for investors discovering BWXT through the nuclear narrative is how mature and stable the underlying defense business is. The commercial nuclear opportunity is the accelerant, but the floor of the revenue base is multi-year government contracts. That combination means the growth story does not require the commercial nuclear market to develop rapidly to sustain the business.
Low risk floor, high upside kicker, that is the structure.
Exactly. And that is why 26% revenue growth from a company in this profile is worth examining carefully. The accelerant is working.
How does BWXT compare to other nuclear infrastructure names?
Centrus Energy is the closest pure-play comparison for uranium enrichment and nuclear fuel. Curtiss-Wright has nuclear market exposure alongside broader defense. NuScale Power is the SMR pure play with no revenue yet. Of those, BWXT is the only one that combines revenue scale, operating margin, and direct exposure to both the naval and commercial nuclear segments simultaneously.
NuScale is the pure SMR bet, but no revenue yet. BWXT is the company that makes money in nuclear today.
That is the key differentiation. Most nuclear renaissance plays are pre-revenue or early-stage commercial. BWXT is generating $860 million in quarterly revenue with real margins. Investors who want nuclear exposure without pre-revenue risk have very few alternatives at this scale.
The valuation premium reflects that scarcity.
BWXT trades at a meaningful premium to general defense contractors because of the nuclear optionality. The risk is that if the commercial nuclear build-out stalls, permitting delays, cost overruns, or policy shifts, the premium compresses while the government segment continues at its base rate. The bull scenario requires commercial nuclear projects to actually break ground at scale.
What is operationally working for BWXT?
The government segment provides cash flow predictability that most defense subcontractors would envy. Multi-year Navy contracts give visibility into revenue 2 to 3 years out. Commercial nuclear is accelerating above the government baseline, and the SMR services pipeline is building without BWXT needing to bet on a single SMR technology winner. Margins are holding at 12% as the commercial mix increases.
Where is BXT?
The commercial nuclear build-out is real but slower than the policy narrative suggests. Permitting timelines for new nuclear plants in the U.S. stretch years beyond initial announcements. If the commercial revenue mix does not scale as expected, BWXT's growth rate returns to the mid-single digits, consistent with its defense contract baseline.
And concentration, one customer for most of the revenue.
U.S. government concentration is the structural trade-off. Defense spending is stable but subject to budget cycles and political shifts. A significant reduction in the Navy's nuclear shipbuilding program would directly compress BWXT's government segment revenue. That risk is historically low given bipartisan support for naval nuclear infrastructure, but it is a real tail risk.
We opened with 70 years of building naval reactors as the floor. The commercial nuclear kicker is the reason the growth rate this quarter was 26%. That is the BWXT bottom line.
Watch the commercial nuclear segment revenue in Q2 and any SMR program announcements. If those accelerate, the growth rate has room to sustain above the defense baseline. If they slow, the business returns to steady but moderate growth. For full coverage this week, STRL, DuoL, PINs, and more, subscribe to Charged Alpha.
We will see you on the next one. This episode is for informational and educational purposes only and does not constitute financial advice.
Charged Alpha is not a registered investment advisor. Nothing in this episode should be construed as a recommendation to buy or sell any security. Always conduct your own research and consult a qualified financial professional before making any investment decisions.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall